Hi, Sean from Mel's YouTube book site, YouTube channel. Lesson 9. Okay, we're going to talk about the balance sheet. Now that all fits into accountancy, into bookkeeping. Okay, so let's get started. Remember in the introduction, remember I went through and I described you a simple balance sheet, which attained to you as a person. We took the analogy of you as a person so that we could help you understand a balance sheet in a nutshell. So this is just a sort of a reminder or a refresher. Adler, remember Adler from the introduction to debts and credits in bookkeeping. So Adler's assets, drawings, as you see down here, expenses, liabilities, equities, and revenue. So I'm just going to give you a brief sort of just overview of this. Remember your assets, you as a person, house, car, everything you can see that you own, fridge, lounge suite, drawings, partnerships, antenuptial. So if you're married in an antenuptial contract, that would be like a partnership. All right. So partnerships, money taken to buy a boat by one partner. Expenses, all the expenses you have for the month. You know, your rent, your house, your electricity, petrol, motor vehicle, car insurance, credit card, and medical aid. And your current liabilities, all your long-term debts, credit card, Eggers clothing store, house bond, etc. Equity is a snapshot of where you stand in your life right now. Basically, if you had to take all your liabilities, everything you own, minus everything that you own that you physically can see, what would you be left with? How would you stand financially right at this time? That's really that's what your equities is. Equities. Revenue, the money you get in from your salary, the rent from your granny flat, the sale of home baked cakes, that sort of thing. So let's move this onto the business. The business. We're going to move this from the simple analogy through to a business of how a balance sheet looks. All right, cool. So in a business, you have assets. You have desks, chairs, cash registers, computer, monitor, motor vehicle, sorry, plant and machinery, etc. All right, your current assets, inventory, stock, customer control account, APSA bank account, and deposits. The drawings, the partnership drawings from the business, money in the kitty where both partners take a salary. Expenses, the running costs of expenses, rent, salaries, electricity, water, staff refreshments, petrol and print and stationery, depreciation, etc. Long-term liabilities, cash loan to the business. Current liabilities, petty cash, supplies and VAT tax, right? Equities, office furniture, cash register, computer, plant machinery, etc. And revenue, that's our sales. Okay, and the interest we receive, not our salary, like in the simple analogy. This is now the sales to the business, our sales to our customers. All right, so the month of March and April. That's what we're doing. We're going to show you for the month of March and April. Mel's Bicycle Warehouse balance sheet, equities and liabilities, capital and reserves. Number one, a balance sheet is a snapshot of your total assets and if your business is profitable. That's why it's so important. Okay, number two, retained income over a year shows exactly if you have made a profit or showing a loss throughout the year. Number three, you will notice, and this is important, that these figures are carried from the second section of the of the March and April trial balance in order to draw up the balance sheet. So if you remember, we did the trial balance. All right, so these are carried forward from there. All right, from those months of March and April's trial balances. All right, so the March and April, the retained income, this is our net profit. If you can remember, you go back and watch those lessons and you'll see that. The retained income for the month of March was $658.53. For the month of April, it was $1,039.63. All right, long term borrowing, capital. The loan the owner lent to the business to start up. That's the money we put in to help the business get going. That's that $15,000. Okay, for the month of March and for the month of April. Current liabilities, suppliers control account. For the month of March, 862.50, and for the month of April, $402.50. The same for the VAT and the same for the depreciation, as you see over here, what they were for March and what they were for April. Okay, the total liabilities for the month of March was $16,536.51. If we add up this total over here, the, the total The total liabilities for the month of April was $16,637.01. Okay, that's the total liabilities for April. All right, now, fixed assets. Office furniture net value for the month of March was $34.78 and $34.78 in April as well. Same with the cash register net value. Same figures for both those months. Current assets for the month of March and for the month of April. The inventory control account, $975 and $379 in the month of April. Customer control account, as you can see, the two figures for March and April. The ABSA Bank, $14,618.75 for March, and $15,444.25 for April. Deposits, same for each month, and petty cash for each month as well. Just remember that these two figures, this figure here for the month of March, this $16,536.51 is the same over there because they must balance because we're doing it for 2 months. So that must balance with that, and that figure for the month of April, when we add up April's retained income and their long-term borrowing and all this stuff, that figure there must be equal to the figure down here for the fixed assets. Very, very important. If they're not equal, there's a problem. You've missed a figure somewhere, if you put a wrong account in, anything like that, you've got to go back and find it. Okay, so the net equity for the month of March and April is the larger figure, which is the month of April's figure, $16,637.01, minus the month of March's figure, which is $16,536.51. That gives us a net equity for the month of March and April of $100.50. I hope you understood this. That was it. That's the balance sheet. It's just a nice explanation of how a balance sheet fits into bookkeeping. It's very, very important, and we did one for March and for April. We showed you the figures for both. All right, please. I think that's the end of it. Yeah, and thank you. We just, you need to this. Let me just give you an idea here. It's very, very, very important that you go back. If you haven't watched lessons 1 to 8, you won't understand what I was telling you here. This is very important. You need to go and watch the entire course and each lesson. If you miss one lesson, you're finished. You won't be able to understand what the next lesson is. If you come to this lesson is part of a 9-lesson beginner's course. So don't come and watch this on its entirety and then expect to know what's going on. You need to start from the beginning. But for those guys who have gone right through to number 9, well done. Well done. This is it. We've come to the apex of the final course, the final video on this, because we've gone right through everything. Yeah, please, I hope in this course we explained everything as clearly as I could. You never, there are people and the circumstances don't understand everything. Please, I hope I've tried to do my best to explain it in the best way that we could. If you have any questions or you don't understand something, please leave comments and suggestions. It's important. And questions. We want to help you. We really are interested in helping you learn bookkeeping because it's a simple science. It's a simple process. If you just put your head down and follow what we've shown you. All right, so please like this video. Please share it with everybody you know. It's a great course, and we're growing this channel. We really are. We're putting everything bookkeeping in Mel's YouTube book site. So we're growing it, and we're hoping we can help you understand this. So share it with everybody you know, and subscribe to the channel. As I said, we're growing this channel as well. Please subscribe. And questions and comments. I keep harping over that. Please leave your questions and comments and suggestions on how to improve this, how to make it easier for you to understand. My name's Sean. Please go also watch our 101 bookkeeping. 101 bookkeeping. We've got a whole playlist on all just basic snapshots of each component of bookkeeping. But that's also, remember, bookkeeping is interrelated. So you need to at least have a basic grounding with bookkeeping before you go watch that. Otherwise, you'll kind of also be completely in the water. So if you don't know anything about bookkeeping, go start at number 1 and go through this course. If you know something about bookkeeping, we have a one-on-one just to give you a quick refresher on the basic concepts of each individual component of accountancy and bookkeeping. So go watch that. All right, Sean from Mel's YouTube book site YouTube channel. Till our next video. Good day on you.